Thank you for joining us today. We hope the presentation showed how we continue to invest in the energy transition and energy security while navigating in a complex geopolitical and macro environment. Today, Ben and I will be answering your questions. Please could we have just one or two each so everyone has the opportunity? And with that, could we please have the first question, Emma?
Thank you, Sinead. We will take our first question now from Ron Busto from Reuters. Please go ahead.
Hi, Ben and Sinead. Congratulations for the new job. Two questions. First of all, about the EU ban on, planned ban on Russian oil. How are you preparing for that? Particularly, what's the status with the German refineries Schwedt and the Druzhba pipeline? How are you preparing for that, given that you're winding down some long-term contracts there? Can you find any alternatives? And a second question about your capex and spending plans. You said you're sticking to the 23 to 27 billion range. I think last time you said it would be at the bottom of that range. Has that changed? And if so, where is the money going to? Thank you very much.
Thank you very much, Ron. Very much appreciate the two questions. What I would suggest is I start with the second one on capex, and Ben, I'll pass the first one on the EU ban to you. So, Ron, as you say, yes, we intend to remain very disciplined on our capex, and nothing has changed in terms of our capital allocation framework. We will remain within the 23 to 27 billion that we've set out. And of course, what you're seeing now is very clearly that elements such as Spring Energy, one of the acquisitions that we have simply done and just announced last week, will be part of that 23 to 27. So continuing the discipline, making sure we don't make any major changes at this moment. Thank you.
Yeah, thanks for the question, Ron. And first of all, let me again also reiterate how shocked and saddened we still are by the daily events that we all witness in the Ukraine. And let me also say again, in addition to Sinead, how beyond proud I am of our Ukrainian employees still coming to work in a very difficult set of circumstances, still operating the majority of our retail sites and our business in the Ukraine under exceptionally difficult circumstances. And of course also the pride that I feel in everybody else in Shell supporting our employees there. Now, on your specific question, Ron, I think we are ahead of the ban or the boycott that you refer to. Of course, we have not only said we would get out of our asset positions in Russia, for which we are making, by the way, good progress, but also we have said no more spot crude, spot oil products, spot LNG, and stopping term as soon as we can. That means for crude and products, most of it will be done by the end of the year. I think there's two small contracts on crude that will probably go into next year. But of course, if there is a real sanction on it or a ban on it, we will be allowed to go faster. Now, we've of course taken note of the ban, the planned ban. We've also taken note of all the political complications around it, so we'll have to wait and see what comes out. But I have all confidence that we will be ahead of the curve when that comes out. On PCK, you know that PCK is not a strategic refinery for us. As a matter of fact, we had agreed to sell it, which then got preempted by Rosneft, which then was waiting for final clearance, which we actually got just before the war started. But now, of course, that whole sales process is on hold. And we have been talking with the German government to see how we can support them in making sure that the eastern part of Germany keeps on being supplied as well as possible with the challenges that we have at PCK. I think that collaboration goes well. There are ways and means to, I suppose, keep on operating the refinery with crude coming from elsewhere if it can't come anymore from the Druzhba pipeline. But that's a complicated puzzle that needs to be solved. But for that, we are in detailed dialogue with the German government. Thanks for that, Ron.
Thank you, Ben. Emma, could we have the next question, please?
Thank you. Our next question comes from Laura Hurst from Bloomberg. Please go ahead.
Hi, good morning, Ben. Good morning, Sinead. My two questions are, the first, again on the purchases of Russian crude and gas. Have you had to open any accounts in rubles to keep these going? Or have you kind of had any problems in paying for these contracts? And my second question is if you can give us a little bit more detail on how your trading units did. I think in the statement, integrated gas did better than last quarter, which was already a very strong quarter. Can you give us, are we talking about a record quarter or a little bit more colour there? Thanks.
Thank you so much, Laura. Appreciate it. Ben, I suggest if you start with the first one, or happy to, and I'll continue on the second one.
Thanks, Laura. I think the whole situation around payment in rubles, the sanctioning of Gazprom Bank, they're all still very complicated matters that are in process of being resolved. First of all, you have to bear in mind, of course, we have a UK nexus here. Gazprom Bank is sanctioned by the UK, so whether it's rubles or not, we basically cannot make that payment because of the fact that the UK has sanctioned Gazprom Bank. Now we have a license to continue paying until the end of May, and we will have to see what happens after that. In the meantime, of course, we watch very carefully what is happening on the continent. With the interpretation of whether the ruble construct is a sanctionable one, yes or no. And for now, therefore, the only thing I can say, we watch it closely. It's important for us, but we will do everything, of course, to stay within the remit of the law, because that's a first principle for us.
Thank you, Ben. And Laura, your second question was really around trading and how did trading do? Well, from that perspective, first of all, let me say, very strong results, full stop for Shell for this quarter. And that is down to a large part the strong operational performance that we've seen. So I'd like to just make sure we spend some time on that as well. With respect to trading, our trading results, of course, are across a variety of the different segments. So what have we seen? We've seen our trading results being quite strong in LNG, as one would expect, with the market flowing through. We've been able to, of course, move some of our cargoes into Europe as the need is required. That's, of course, logical with the size of trader that we are and the size of our portfolio. We've also seen very strong trading results with respect to our refining and products, our chemicals and products segment, where we've seen that particularly strong on the product side. Beyond that, of course, we've talked a little bit about our res results, and you've seen some of the trading elements coming through there as well, where we've had very high EBITDA coming through of some 500 million, which is down to the strong ability of our trading portfolio being able to bring gas into Europe where it is needed most. So on that, thank you. Emma, may I have the next question, please?
Certainly, thank you. Our next question today comes from Tom Wilson from the Financial Times.
Good morning, Ben and Sinead. Firstly, Ben, a few moments ago in response to Ron, you mentioned that you were making good progress on the divestment of the Russian business. Obviously, you've got 3 joint ventures with Gazprom, the principal one being Sakhalin. So, can you tell us what good progress means? Are you trying to sell that stake? Who are you talking to? And what's the time frame for actually getting out of the equity there? And then secondly, in the UK, these record quarterly profits almost certainly keep the debate about a windfall tax alive. Do you think it might be helpful for your arguments in the UK if you broke out the contribution of the UK to your profits? I think lots of British readers probably read the $9.1 billion figure and assume that was all made in Britain, and therefore you need to pay a windfall tax on that amount. Would it be helpful to break out the UK figures, and could you give any sense of how much of that profit was made in the UK? Thank you.
Thank you very much, Tom. So 2 questions there. The first one with respect to Russia, I'd suggest, Ben, you take it, and then I'll give some input into the second one.
Yeah, sure.
We'll share.
Thanks, Sinead. Thanks, Tom. Well, it's a commercial process, Tom, so I will not go into great details. But first of all, let me again say that the decision to exit all our positions in Russia has been taken by the board with conviction. So even though at the time we couldn't say much more than it's an intent, the intent is indeed one that is backed up with a lot of conviction to get out of Russia. Now, we have probably the most complicated position in Russia compared with our peers, because not only do we have Sakhalin Energy, we have SPD, we have an exploration venture, we have a retail network, we have a lubricants plant and network, and then we have, of course, Nord Stream 2. And they all require a different type of pathway to terminate our involvement there. I think probably Nord Stream 2 is easiest to understand. That is a publicly known process, of course, that follows probably the bankruptcy courts in Switzerland. But our positions in country, they are in various stages of commercial progress. It is a commercial process, so it is not abandonment. It is indeed trying to sell them. Now, as you can imagine, it is being speculated upon, etc. I will not comment on the speculation, but the update that I got from the team shows that there is actually good progress on all the positions that we have there. I can't tell you exactly when that process will come to a conclusion, because you have to bear in mind that even if we find buyers and we agree a sales and purchase agreement, it's still subject to the Russian Federation approval. So, and that, of course, I cannot judge how long that will take. But we're very clear, it is a process that we are entering with conviction. Today, we're also updating our Russian staff in Moscow on the progress of the sale of Shell Neft, so in other words, our retail and lubricants business. Thanks, Tom.
Thank you, Ben. And Tom, your second question was around really the profits that we have. Would it make sense to break out the UK results in the frame of the conversation around windfall tax? Well, first of all, let's take a step back. The macro is just incredibly volatile at the moment, and the prices have moved substantially. Fully understand that. Of course, big difference to where we were 2 years ago, where prices were in a very different spot, and of course our profits were too. Of course, what this is doing is driving a lot of pain for people and businesses, and we can see that. What is important for us, of course, is to make sure that we have a stable approach, a stable investment strategy that allows us to continue to invest in the country. And that's why we've been very transparent about our commitment to the UK, about our intent to invest up to £25 billion in the UK this decade. And that's very important to us in the investment climate that we're in around that. In terms of the ability to break that out in terms of sharing the results, we're in an awful lot of countries, and so to be able to do so is quite complicated. And of course, we've got a lot of partners that we would have to take into account as well. So thank you for that, Tom. Emma, may I have the next question, please?
Thank you. We'll now go to our next question from Jenny Strasberg from Wall Street Journal. Please go ahead.
Hi, good morning. I wanted to ask you, I know there have been a lot of Russia questions, but you have $1 billion carrying value according to the notes to the financial statements as of, I think, March 31st, of $1 billion remaining on the balance sheet. So do you anticipate that will bring further write-downs? And also, I'm curious if you can weigh in, Ben, on the Groningen field in the Netherlands and the pressure to increase production there, and also whether you're seeing increased demand for long-term LNG contracts, please. Thank you.
Thank you, Jenny. Ben, I'd suggest I take the first one on the balance sheet and pass the second on to you. So, Jenny, you're right. I'm glad you enjoyed the disclosure. I think note 8 is what you're referring to specifically, but indeed where we talk through that we have around about $1 billion left on the balance sheet. And that's basically split into 3 different elements, just to keep it really simple. What we've got in effect is, the first part is around Sakhalin. It's the dividend related to 2021. So basically the dividend from last year, which has been declared and will need to be paid out. So that relates to the past, and that's what we see on that, and that's the bulk of what you're seeing there. The second element is quite small. It's a little bit of inventory, some of the things we've got on lubricants and some of our retail sites. And the third one relates to the gas contract that we've got coming into Europe, which of course is key to the security of supply into Europe. So those are the 3 elements. In terms of what do we see on that, we'll see how that plays out. It'll come down over time as well in any case, Jenny, but thank you.
Yeah, thanks, Jenny, for your question. So on Groningen, as you will know, of course, the the Groningen field is in wind down. We've also been very clear in the last few years that any decision on production levels does not sit anymore with NAM, and therefore we have no role to play in decisions when it comes to desired or needed production levels. The whole balancing act between what is considered to be safe and societally acceptable versus how do we preserve energy security is a matter for government, is not a matter for private companies. And therefore, also on this occasion, I would say it is for the government of the Netherlands to decide what they want to do. I'm going to use your question on LNG a little bit to also put a few other important facts in the discussion here. Of course, if we have a major disruption or a boycott on Russian gas into Europe, that will be a major hole in the whole supply picture. Europe consumes about 120 million tons of LNG. These are million tons, so not BCMs, but I bring it to million tons to bring it back to the LNG question. That is about 30% of the world's global LNG supply. And if you add back what we already import as LNG into Europe, which is about 80 million tons, you're looking at 200 million tons of LNG that Europe would have to attract to somehow replace all the Russian gas that it would not take anymore. That's more than half of the total LNG market. That's very significant. And therefore it is unlikely that LNG only can be the role or can be the solution to this particular tightness. Now the other thing you have to bear in mind, of course, is new capacity coming on, because a lot of people say, well, new LNG plants starting up. Well, this year it will be 16 million tons maybe. And then the next 2 years, maybe another 16 million tons. So here we are talking about 30 million tons of new LNG coming on, which is of course much less than the 200 million tons we're talking about here. If anything, it's roughly the same amount of Russian LNG that may well be at risk if there would be sanctions on it as well. So the whole idea that LNG is a quick fix for Europe, I think is something that we have to be very careful about. It may be part of the equation, but it will not be an easy solution. Thank you.
Thank you, Ben. Emma, can we have the next question, please?
Thank you. We'll now go to our next question from Emily Godson from The Times. Please go ahead. Your line is open.
Morning. Hi, Ben. Hi, Sinead. Thank you for the questions. First question about the windfall tax debate, and same question to you really as to BP earlier in the week. So you set out plans to invest up to £25 billion in the UK, and most of that in low carbon. The government saying a windfall tax would deter investment. So just to be really clear, would you change your mind about those £25 billion plans if there was a windfall tax on the North Sea? And how much of that would really be at risk? Would you really turn away from long-term investments in wind farms if there was a temporary higher tax on oil and gas? The second question is just to follow up on your comments just then about LNG not being a quick fix if we see gas disruptions, Russian supplies into Europe. I mean, how worried do you think we should be about the outlook for oil and gas prices and supplies? We've seen the IEA even talk about potential rationing. Do you think that's credible? Thank you.
Thanks very much, Emily. Ben, I think I'm definitely passing the first one to you, and let's see where we go in the second.
I expected as much, Sinead. Thanks, Emily. Yeah, I think Sinead probably said it all on windfall taxes, but let me see whether I can add a little bit more color to it. So, yes, indeed, we have a very strong commitment to investing in the UK because we see, first of all, the policies in the UK being very supportive for the sort of investments we would like to make. So the $20 to $25 billion of investment into mostly new energies, about 75% of that would be indeed in low or no carbon energy, is a very firm plan that we want to carry out. But then, of course, I should also say that if you talk about these types of investment levels, of course, they do require a stable and a predictable financial outlook. It does require stability of policies and everything else. because it's not as if we can already now predict how these investments are going to look like when we have to decide on them in, say, 2027. Now, to your specific detailed question, if there was a windfall tax on North Sea, would that impact our plans for EV charging investments? I suppose not. But the point in general is that, yes, we have a very strong conviction to invest in the UK. And yes, these plans will indeed have to make economic sense when they come to making the investment decision on the day. Now, to your second question, LNG is indeed not a quick fix. We will have to therefore do a whole lot of other things. LNG for starters, and I would imagine that indeed Europe will be able to attract quite a bit of LNG out of the global markets. But of course that will come at a higher price. Otherwise it will continue to go to those who currently purchase. But then I would expect also that there will be more gas domestically produced. And in that sense, we are working hard, for instance, to get our Jackdaw project approved. I would imagine in all companies and countries in Europe, people are reappraising their opportunities for short-term and near-term startups, tiebacks, debottlenecks, etc. So I would imagine a little bit of extra domestic production will help. Importation of pipeline gas, whether that is from North Africa or indeed from the Scandinavian countries, will play a role as well. And then, well, depending on how it all plays out, Emily, and this is very speculative and therefore I don't think it's useful to go into too much detail. Well, yes, we will have to indeed reduce our dependence on fossil fuels. That was the plan all along, wasn't it? And therefore I would expect that energy efficiency improvements will have to play a key role, and continuing to invest in alternative forms of energy, which is very much core to our purpose anyway, providing more and cleaner energy solutions. And I think there is no alternative for Europe in that sense either. So I see this actually as a way to accelerate our strategy.
Thank you, Ben. Emma, to our next caller, please.
Thank you. We'll take a question now from Stanley Reid from the New York Times. Please go ahead.
Good morning. Two questions, if I may. I mean, could you give a little more color about your operations in Ukraine? I mean, how many filling stations and so on do you have, and where do the refined products come from? And second question, there's been a lot of discussion about, Russian oil being refined in India and sent back to Europe, Russian oil being mixed with other, oil from, other origins. I mean, when you think about, what products you will handle and won't handle, I mean, how do you think about those issues?
So two questions there. The first one on operations in Ukraine. I'll start with that one. And then in terms of just the mix and what products, Ben, I'll pass to you. Indeed. So thanks for that, Stanley. So what are we seeing in Ukraine? We have around about 130 retail sites. It's through a joint venture there. So we're working very clearly to make sure that there is consistency of supply. That's been very important. But first and foremost, it was about our people, making sure that we could ensure they were safe, and for those who are actually fleeing the war, making sure we can assist them in terms of exiting and just safe flow, safe passage, etc. Of those 130 retail sites, we've been remarkably proud in terms of just how they've been kept running, how they've been able to continue to supply to the people who need it most and getting the supplies into the country. But it has been difficult, and I think it's fair to say we remain surprised and impressed by the teams who are just keeping those running. Ben? Yeah,
thanks, Sinead. And we have about 1,400 people in that joint venture in the Ukraine. So it's quite a sizable operation from a sort of a human capacity perspective. I think you're onto a very important point as well, Stanley, which is, what really is Russian. We've been very clear that we do not want to buy Russian product and here I'm talking specifically about oil products because that is really your question. And we haven't done so with the purpose of buying it and then blending it and turning it into non-Russian. I know there was, of course, a narrative in the market about a Latvian blend. Well, we haven't participated in that type of process. But you're also absolutely right. What happens if a refiner in, you mentioned India or in any other country, buys Russian crude, which is happening, refines it, and then the products out of that refinery find their way into all sorts of diesel, jet fuel and other streams around the world. At that point in time, we do not have systems in the world to trace back whether that particular molecule originated from a geological formation in Russia, yes or no. That doesn't exist. Also, the definitions of what is sanctioned and what isn't sanctioned take into account that if a product is substantially treated, reformed, changed, it actually loses its origin. So therefore, diesel coming out of a Indian refinery that was fed with Russian crude is considered to be Indian diesel. And it's very hard to trace back what exactly is and isn't therefore Russian origin. But we have been very clear, we do not buy products that have a clear Russian nexus. So therefore, we don't buy from Russian counterparties, we don't buy any component of Russian material in the spot trades that we do. The only way, of course, is that we buy still products on term contracts because we are contractually obliged to lift. And in that sense, we are no different than anybody else. And I would imagine, on the whole, we are well ahead of any sanctions that will come out on this.
Thank you, Ben. And Emma, could we have the next one, please?
Thank you. Our next question now comes from Tom Van Gerp from NUNL. Please go ahead.
First question is about leaving Russia and the cost that brings. You reported $3.9 billion this morning. I'm wondering if the amount of costs will rise in the next couple of months or quarters. Second question is about something completely different. It's Shell Energy. You started with that a few months ago, I think. And I'm wondering how the first few months have been in this quite tough market. Thank you.
Great, thank you for that. Tom, I'll start with the first one, and Ben, happy to pass to the second? Excellent. So in terms of, you rightly pointed out, Tom, that we have taken effectively $3.9 billion of an impairment this quarter. That relates to really the breakdown of the assets that are in the country. So specifically what you're after is really, will that rise? Do we expect to see much more going up? Well, what we've got left is that $1 billion, around about $1 billion left on the balance sheet, split between the dividend that we expect to come, a gas contract and a little bit of inventory there. So that will play out in the next couple of months. We expect to receive those monies and we'll see there. What we do also see, of course, is that as you see more and more of Russian products coming out of the market, the impact will flow through in terms of the prices on the variety of whether it's LNG, crude or products, but that's really the knock-on effect to the energy system. But specifically, we have around about $1 billion left and we hope to see that paid out. Over to you, Ben.
Thanks, Sinead. Thanks, Tom, for the question. To be perfectly honest, I don't have the operational details to hand. But let's also be very clear on this sort of more from a strategic perspective. Indeed, we have an integrated power strategy that also focuses on Northwest Europe. That means that we are investing in what we call position one, so the upstream. So wind and solar power generation. Of course, we are a player in the midstream, so trading and optimization. And indeed, we need to have customer portfolios to make the integrated play complete. And in the end, of course, if we want to reduce the emissions of our product portfolio, we will have to sell to end customers in order to indeed claim that we have decarbonized energy also for sale. So therefore, we have strong conviction that we need to operate in countries like the Netherlands. You will know that we did not secure a position before in an M&A process. So therefore, we have decided to go organic. So in other words, to start this on our own terms. You will probably understand that that is not always easy. You could argue your timing has been impeccable, namely it's difficult to start at this point in time. But in the end, this is a long-term proposition for us. So we are committed to the Dutch market, also to providing clean power to households and small businesses there. Maybe in the future call we can come back on it and I can update you exactly how we are doing.
Thank you, Ben. Emma, back to the callers, please. Next one.
Thank you. We have a question now from Simon Jack from the BBC. Please go ahead.
Thanks, Sinead. Thanks, Ben. Your colleagues and friends at BP were helpful enough to say how much UK tax they expected to pay in 2022. I can't see a similar disclosure in this release. Could you give us an estimate of how much UK tax you expect to pay with prices at these levels? And secondly, how long do you think we're going to see prices at these levels? What price level are you using to do your return on investment calculations for any new oil and gas projects?
Thank you very much, Simon. Again, I think I'll take the first, if that's okay, and pass Ben to the second. Getting into a rhythm here on this. Indeed. So in terms of UK tax, I think it's fair to say, Simon, so I won't speculate on what number I'll end up, because I'm reasonably sure wherever I do, I will get it imprecise at some point. We will pay tax this year given the current macro. That's my expectation at the end of the day. And clearly I expect that we will be paying hundreds of millions in the UK in years to come. In effect, if I take a step back and look at where we are, our effective tax rate across the globe for this quarter specifically is 29% in any case. So I think you will see us as being a taxpayer in the UK, assuming this macro continues.
Yeah, thanks, Simon. I would, as always, say it's very hard to predict what's going to happen with prices. And I would say this quarter is not only not an exception, it is actually probably the hardest quarter to call what is going to happen next. The only thing I can say with some high degree of confidence is that it will be a rocky ride. We will see a lot of volatility, and a lot of it is driven by the real tightness in the market. I mean, the industry has not invested enough to keep up with what is still a very strong demand. Demand for hydrocarbons is still growing. And investment in hydrocarbons is actually coming down. So no wonder that you will see tightness. But then on top of it, of course, the disruption that comes with this terrible war, the fear factor that you see also priced in to markets, all of that makes it a very volatile mix and very hard to call. Now, to your second question, how do you deal with pricing when it comes to investment decision making? Well, as a matter of fact, we don't. We have enough investments in our upstream portfolio to understand that we can spend, say, $8 billion a year on it to maintain our upstream business or have a gently decline, 1% to 2% per year. So therefore, it's not so much, will there be good investments? It is much more, what is the most resilient investment I can do? And therefore, very much when looking at upstream investments, we look at the break-even price. So in other words, how low would oil and gas prices need to go for me to regret this investment? And that is a much better indicator to make decisions than the decisions, will this pass a hurdle rate? And what sort of oil price will I use to calculate that hurdle rate? So it is operating a little bit more in a world of abundance that will allow us to go to what is break-even rather than what is expected.
Thank you, Ben. Emma, to our next question, please.
Thank you. We'll go to our next question now from Matt Oliver from the Daily Telegraph. Please go ahead.
Good morning. It was reported previously that you were looking at the Cambo oil field again. Can you please tell us what the latest is on that? Are you looking afresh at Cambo? Do you think you'll go ahead with it? And then just secondly, you were talking about how Europe might adapt to moving away from Russian hydrocarbons, and you spoke briefly about things like LNG. Could you tell us what's your view in terms of what Europe can do in time, perhaps for next winter or even the winter after that? Where can Europe get the most bang for its buck in the short term? Are there projects, for example, that you're looking at that can be sped up in time for next winter? Could you just show us some of your thinking on that?
Thank you very much, Matt. And again, I think I'm going to take the first one and ask Ben to comment on the second one. In short, with respect to Cambo, there's no change in our position, Matt. It remains exactly the same. However, what does interest me very much is how can we ensure we quickly get more secure energy into the UK? And therefore, what's really on my mind is Jackdaw. For me, that's incredibly attractive, and we hope to talk with the government further on that and see if we can get the approval processes going, because in effect, that's gas into the UK, it's tieback, it will be more quickly than many of the other elements. So that's very attractive to me. At the same time, of course, really focusing in on actually making sure we deliver on what we started, and delivering, first of all and foremost, on our existing assets. So great operational performance, and Q1 was very strong on that. But then secondly, getting those assets which are under construction up and running so we can get that energy to where it's needed most. And of course, we've got two there. We've got Penguins and Pierce, which are both under construction at the moment. And it's really key for us we get those operational and delivering for those who need it.
Yeah, thanks, Sinead. And I think Sinead also partly answered the second question, because it is indeed operational delivery, and it is bringing the projects that are nearing their startup dates to fruition as quickly and as efficiently as possible, ramp them up very well, etc. That's where we are focused on. And that's where, frankly speaking, we can make most near-term contribution as an integrated company. I think what I try to point out with the LNG narrative is that there is no silver bullet. It's quite often LNG gets positioned as the silver bullet, and while, of course, the prospects for LNG may be bright as a result of this, it is not going to be the quick fix that sometimes people have reported it to be. So I think there will be, and that's also a little bit your question as well, Matt, there will be a whole range of things that companies and governments will need to do to deal with the challenges. They're slightly different for gas than for oil, as you can imagine. Gas is actually, I think, the more difficult one. So again, let me focus on that. So first of all, on LNG, let us make sure that we have the import capacity to bring the LNG. So Germany, of course, and Italy are significant importers of Russian gas, but Germany doesn't have an LNG import terminal. Now, all of a sudden, of course, there's a renewed attention to bring LNG import terminals on stream, and we are involved in that. We have, as Sinead said earlier on, we have signed a capacity agreement and therefore will be ready to deliver LNG in Brunsbüttel, which is one of the LNG terminal sites, but that terminal still has to be built. Most probably will be a floating regasification unit, though. But there will be more of these terminals needed around the continent. On top of that, yes, debottlenecking pipeline capacity from other parts of the neighborhood, be it North Africa, being it Scandinavian countries, is going to be important. And then I'm afraid it's going to be a whole long list of energy saving measures, which again, I'll repeat myself, we would have to do anyway. And it is shifting out of hydrocarbons into power applications for demand. So electrification of demand, bringing on stream wind farms faster. We are very keen, and we are working with the government here in the UK also to find out how we can actually cut back the whole approval and startup process of wind farms, which is currently more than a decade. It doesn't need to be. It can be half it. These are all sensible things. Will they help us this year? No, but they will help us get out of hydrocarbons, and they will help us get out of, in that sense, Russian dependence. Now, will that in the end mean that we therefore can sort of skate through the winter when it comes? Let's hope so, but it will be a tough winter if we don't have any Russian molecules coming into Europe. That's the only thing I can say with a high degree of certainty.
Thank you, Ben. Emma, to our next caller, please.
Thank you. Our next question is from Alex Lawson from The Guardian. Please go ahead.
Hi, guys. Two quick ones. First of all, can you tell me about the outlook for your trading business? And secondly, Ben, do you have a sort of simple message to the British public who are painting you as the bad guys in this scenario? What do you say to people in the street when they claim that you're profiting from a difficult energy situation?
Thanks, Alex. Two very different questions. I'll take the first one and Ben will take the second. On the first one, in terms of the outlook for the trading business, I'm not going to speculate on where we will end up this year. What I would say is that our trading business has done very well. It, of course, has the benefit of being linked very strongly to our underlying assets. So we have the ability to lift equity, to be able to move our own barrels or molecules wherever they may be. So we have a strong underlying business there. So from that perspective, I look forward to our trading business working very closely and showing that integrated value chain that we have across the portfolio. Ben?
Thanks, Sinead. Thanks, Alex. Well, as Sinead said, we are acutely aware of all the difficulties that these high energy prices bring, particularly, of course, for the more vulnerable customers. But actually, for that matter, for almost every customer. Yeah, it's a very significant increase in cost of living. It is very painful for a lot of people. And of course, a company like us also feels the obligation to help out. Now, of course, we can help out, and we do help out with things like hardship provisions, where we retail energy to households. We have all sorts of schemes in place to help with payment holidays and everything else. But these are, of course, short-term and to an extent stopgap measures. The real big contribution that a company like us needs to bring actually goes back to the purpose of the company, which is to provide more and cleaner energy solutions. So more energy solutions in the sense of the projects that Sinead mentioned. So starting up Piers, bringing on Jackdaw as a project, Penguins, etc. All these things will help bringing new supply into the UK in this particular case, and therefore alleviate market conditions. Operating exceptionally well, and we are very clearly focused on that as well. And then, of course, in a somewhat longer term, a commitment to spend 20 to 25 billion pounds this decade on cleaner energy solutions, predominantly in the UK, will help out as well. But I'm acutely aware that all these things will not bring relief this week. So therefore, for this week and next week, we are focusing on some of the hardship measures that we have also put in place.
Thank you, Ben. Emma, could we have the next question, please?
Thank you. The next question now comes from August Graham from PA Media. Please go ahead.
Yeah, good morning, both. Unfortunately, another question on windfall tax, I'm afraid. I was just wondering kind of what discussions you've had with the government around the possibility of windfall tax, and what's been said there from you, and what ministers have been saying to you as well.
Thank you, August. I'll just simply start. So with respect to the windfall tax, of course, it's a matter of policy. And it's a matter for government very specifically. What we are here to do is to engage and to be able to talk and answer questions that the government may have. And we're very open and transparent on that. And we continue to do so, and will continue to do so as we are asked. I think I'll simply stop there. Thank you. Emma, could we have the next question, please?
Thank you. We'll now go to a question from Bert van Dijk from Dutch Financial Daily.
Yes, good morning, Ben and Sinead. Ben, you talked about the LNG issue about the consumption in Europe being 120 million tons. I'm just trying to figure it out. Could you elaborate a little bit more on that? Because I'm not sure what you were saying. You mean that the total capacity already in Europe is so strained that it's very hard to increase that to replace the Russian gas we need to? Is that what you're trying to say? Thanks.
Thank you.
Yeah, thanks, Bert. Let me indeed see whether I can be more precise with the numbers. So if you look at the total amount of gas that Europe imports from Russia, that is 120 million tons. And I think if you do it, most people will report this in cubic meters, so it's 168 billion cubic meters. But in million tons, it's 120 million tons. That's the total imports of gas from Russia into Europe. That 120 million tons is equivalent to 30% of the LNG market, which happens to be roughly also the uncontracted, so short-term LNG sales available. So if we were to very simplistically say, okay, let's stop Russian imports and let's just buy it on the spot market, we would be buying up the entire spot market as Europe. I don't think that is likely or credible, and if we try it, I hate to predict what the price would be. So therefore, it is not a simple solution. That is the point that I try to make, Bert.
Emma, could we have the next question, please?
Thank you. We have a question from Rob Coster from NOS Journal. Please go ahead.
Thank you. Good morning. I have a question for Mr. van Beurden. Shell is making a good profit during wartime and see also that a lot of consumers are troubled. Does that make you feel uncomfortable in any way? And second question is, can you understand the discussion in some countries to tax raise the energy companies to make it possible for governments to make a compensation to those people that are troubled?
Thank you, Rob. So to start with the second half of your question, of course I can understand that governments are also scratching their head and say, well, how do we deal with this general cost of living crisis? Because not only is it direct energy costs that go up for households, of course energy, because it is so integral to economic success, will find its way also in transportation costs and everything else. So of course this will require a government response. But I do think it is a government response that this requires if they want to alleviate the issues that they are seeing in their society. We are there, of course, to be a partner for government in figuring out what is the right thing to do. And we are there to indeed invest in more supply. I keep on making that point. But the issue is that demand is going up, supply is being curtailed by lower investments, partly because of the pandemic, and partly also because there is a reluctance increasingly to invest in oil and gas, while oil and gas demand is still growing. Now, so do I understand that? Yes, absolutely. Now you say, well, what about the effect of the war? Well, I would say two things there. There is undoubtedly an effect of the war, of course, and particularly in Europe, high gas prices are caused by a large degree by the prospect that we may be very short gas in months and years to come. But higher prices were already there before the war started. And again, the role that we need to play is to, as much as possible, alleviate that with the best supplies that we can bring on. So if you look at our profits this quarter, they are indeed strong. And they are helped by the macro. And the macro is indeed, in that sense, also impacted by the war. But at the same time, we've had a very strong operational performance. We have taken out a lot of cost. If you look back at like for like, how did we perform in similar macro conditions in previous years? Our performance now is significantly better than it ever was in likewise macro conditions. So it's not just a war profit, as some people would like to point out. It is very much also the performance of the company, which has significantly strengthened in the run-up and also during the pandemic.
Absolutely. Thank you, Ben. Emma, could we have the next question, please?
Thank you. We have a question now from Alistair Thomas from Energy Voice. Please go ahead.
Good morning. Thank you for taking my questions. Cambo and Jackdaw in the UK have both been mentioned this morning. There are individual grassroots campaigns been launched against both of those developments by NGOs. So what would you say to those that have those projects halted? And secondly, if I may, you've both mentioned the Penguins project this morning. There's clearly been some delays to the timeline on that one. Can you just confirm for us whether you still expect sail away of the FPSO from China this year? When might it arrive in the UK? Is there any update you can give us there also? Thank you.
Thanks, Alistair. Let me start. With respect to Cambo and Jackdaw, as you say, we've discussed it previously in the sense of Cambo, nothing has changed from our perspective. With respect to Jackdaw, it is one we continue to hope that we will get the approvals. It is something that we believe in and that we would like to see brought in and sanctioned for the UK, bringing, in our view, much needed energy into the UK in a more rapid fashion than many more. So we do expect to progress that, Alistair, and we subject to consents, of course, and approvals, and that's what we're waiting for at the moment. With respect to penguins, I'm not going to give you a date. I will be careful on that in that sense, but we are progressing it well. We're seeing good progress occurring. You're right, there has been a delay. It has been delayed in China, in the shipyards. Of course, that's the impact of COVID and the lockdowns that have happened there. It's unfortunate, but understandable. So hopefully you'll be hearing more news on that as soon as possible. Thank you. Emma, could we have the next question, please?
Thank you. We'll now go to our next question from John Mannering from Argus. Please go ahead.
Good morning, and thanks for taking my questions. Just following up on the earlier question about CapEx, you were talking about the $23 to $27 billion budget that you have for this year. If this elevated price environment persists, do you see your spending moving towards the upper end of that range? And given that Ben previously mentioned that the industry is underinvested in hydrocarbons, can you foresee an increase in upstream investments, be it long cycle or short cycle, if these higher prices persist? And my second question is about this Schwedt refinery in Germany. Do you still intend to sell your 37.5% stake there? And what are your options if you can't?
Thank you. Thanks, John. I take that as 3 questions rather than 2, but let me go through it. I'll do the first 2 and Ben pass the third one. No problem at all, John. So with respect to our CapEx, yes, we intend to remain very disciplined in terms of the 23 to 27 billion. Nothing has changed in our capital allocation framework. We've been very clear on that. So in terms of the amount we will spend on upstream, and the different segments, so our transition segments as well, and then into growth. And of course, with respect to growth, you've just seen the Spring acquisition, that Indian platform, which we're quite excited about coming through, which will be pretty transformational. That will be within the 23 to 27 as well. So just to be clear, nothing has changed on the capital allocation framework. Linked to that, specifically, you asked about the hydrocarbons and would we see more investment into that element of it. Again, 23 to 27. We've stuck by our perspective in terms of how much goes into upstream. So 8 billion was the amount that we had allocated there. And of course, you've seen a number of things going through. Our strategy remains consistent on that. We've just announced that we have entered into Atapu, the Brazilian transfer of rights, which has just come through. And that amount will again remain within our budget. So it is staying very disciplined on our capital.
Thanks, Sinead. Thanks, John. Well, on PCK, I think I've mentioned it before, but PCK is not strategic for us. That's the reason why we have been keen to divest it. We have had, as a matter of fact, a number of goes at it. And we were quite pleased that we had a good buyer for it some time ago. Now, as I said, Rosneft preempted. They had a right to preempt. That obviously at the time was also not our preferred outcome. But since they had a right to preempt, we were ready to transact with them. I think at 1 minute to midnight, then of course that process got frozen because of the conflict. And it's kind of difficult to speculate what will happen next. What I do confirm though is that PCK has no strategic value for us. So we will, one way or other in the long run, be looking to have it out of our portfolio. But while it is still in our portfolio for a minority percentage, and when we still are involved in lifting products from it, we will do that in the best possible way, serving German interest. And that is exactly what we are discussing with the German government at the moment.
Thank you, Ben. Emma, to our next caller, please.
Thank you. We have a question now from Veronique Dupont from AFP. Please go ahead.
Good morning. Thank you for taking my questions. So first of all, I wanted to know if you could spell out, even if you've alluded to that during the call, if you could spell out how the renewed focus of the UK energy strategy on North Sea production has changed your prospects of investment in the region, in the North Sea, as well as that of the industry. And second question, regarding the lawsuit in the Netherlands started by Friends of the Earth, and saying that it could involve directly members of the board. What do you answer to Friends of the Earth, and are you concerned about the possibility that board members are personally being sued?
Thank you, Veronique. Much appreciated. I'll take the first one, Ben, and pass the second to you, if that's okay. Excellent. So with respect to North Sea production, in terms of that, in terms of our views, we are still incredibly keen to ensure that we continue to play our role in the UK, and I think that's very important, and hence the comment on up to 25 billion of investment this decade, of course subject to board approval, etc. So we're continuing to stay focused. Nothing has changed in that part. We remain committed to the UK and we continue on that route. With respect to the industry, of course, in the current situation, we're very aware that there is a renewed focus on getting volumes quickly and tightly into the UK and making sure that operational performance as well. I'll stop there. Ben?
Yeah, thanks, Sinead. Thanks, Veronique, for the question on Milieudefensie, or Friends of the Earth, as they are known internationally. Yes, we've taken note of the letter, all 40 pages. I've read it. I think it's probably best that the details of the allegations and insinuations and our response to it plays out in the Court of Appeal, which is of the right place for having this discussion. Let me nevertheless reiterate some of the points that Sinead also made in the pre-recorded message, which is that we are making very strong progress in our energy transition strategy. Bear in mind, this was a strategy that was approved by 89% of our shareholders, or let me be more precise, got support of 89% of our shareholders. We reported the progress against that strategy, and we will again ask for an advisory vote this AGM to see how our shareholders feel about it. But, there's not too many companies out there who have, first of all, a commitment to reduce their Scope 1 and Scope 2 emissions by 50% by 2030, then have made progress to the tune of 18% already this year. We have reduced the carbon intensity of our product portfolio by 2.5% at a time that the world is actually standing still and increasing the total emissions from hydrocarbon demand. So we are well ahead of society in that sense, and we are committed to meet the targets that we have set out to meet. And these targets, we firmly believe, are in line with the Paris Agreement. So these are some of the arguments that will also then feature in the appeal. What that means for directors, etc., I think that is probably best left to the court system to determine.
Thank you, Ben. Next caller, please.
Yes, good morning. A couple of questions related to the energy transition. Firstly, on India, obviously you last week announced your acquisition of Spring Energy, which is going to triple your installed renewable power capacity. In terms of the commercial case for that acquisition, can I ask what sort of a payback period and profit margin you see on that investment, and how does India fit with your strategic priorities? And secondly, Ben, you spoke about the need for stability of policy when it comes to investments in the transition, specifically on hydrogen. Are you seeing countries move as fast as you would like, so in tangible ways to encourage the take-up of hydrogen? Are there any countries worthy of a special mention in this regard? Thanks.
Yeah, thanks. I think that's Thomas, actually, but thank you. So 2 questions there. I'll take the first, and Ben, hydrogen to the second. With respect to Spring Energy, indeed, we've just announced it, so just moving through on all of the details, of course, Thomas, and you'll hear an awful lot more about that, I suspect, in the coming quarters. How does it fit for us? It's just a fabulous opportunity for us, of course, to get a foothold into an amazingly large market, and this team has done some wonderful things. It gives us a great platform in terms of both solar and wind into this truly emerging market as well. So very excited, very interested. Of course, all of those investments that we do it within the frame of what are our expected returns, etc., and we've been quite transparent on those as well. So we'll spend a bit more time on that in the coming months, I think. Ben?
Yeah, Thomas, thanks very much. Nice to get a hydrogen question. Well, hydrogen, of course, is a very topical part of the energy system. A lot of people talking about it, a lot of ideas floating around. And what I can say is that we are probably the ones who are making most progress on the ground. So we have a 10 megawatt electrolyzer already running in Germany. Earlier on, during the China Winter Olympics, we started up a 20 megawatt electrolyzer in Zhangjiakou, which is currently supplying hydrogen to the municipality there for public transport. And we are very close to making a few major investment decisions on hydrogen in Northwest Europe. I think if I were to pick out one country, let me pick out my home country, the Netherlands, where we have been in a detailed discussion with government on building a 200 megawatt electrolyzer in the port of Rotterdam. That is making very good progress with very clear understandings with the government how that would work, and how also the infrastructure build out would be, what sort of support we would get for using that hydrogen in the interim period in our refining processes, but then ultimately making that hydrogen available for heavy-duty road transport, for which, of course, the demand is yet to really evolve. And we have strategic partnerships with the like of Daimler Trucks and with Volvo Trucks to make sure that we actually can seed that market and build that demand out and overcome the chicken and egg problem. So yes, I'm very excited, not just in a generic sense, but very excited that our lead position that we currently have may well triple or quadruple in the next few months or quarters to come. So stay tuned.
Thanks, Ben. I think, Emma, let's take one last question, please.
Thank you. Our last question now comes from Tom Espiner from BBC. Please go ahead.
Hi there. I've got two questions. My first question is about energy security and oil prices in the UK. It's my understanding that investment in North Sea oil and gas wouldn't actually make any difference to either energy security or prices, because the products is just sold on international markets and prices are dictated by international markets. Is that your understanding as well? Would it actually make a difference? And secondly, just going back to the windfall tax. I mean, obviously, politicians have an incentive to try to be, to be seen to be doing something about, oil companies making massive profits and, the link to the cost of living. So, to head that off, would Shell ever consider just saying, "Look, we're gonna cut our profits and we're gonna give more back to the societies in which we sell our products"?
Thank you very much, Tom. Ben, I'd suggest if you take the first one, and I'll take the second, if that's okay.
Yeah, sure. I think, Tom, your first question, does the North Sea really matter? Well, it depends how you look at it. You're absolutely right. The UK and the North Sea and the supply coming from it operates in a global system. So you cannot have a situation where oil and gas prices in the UK are particularly lower because we have somehow sorted out the North Sea better than other countries have sorted out their supply points. We operate in a global market, so therefore global dynamics do play a role. But having said that, of course, if you do invest in the North Sea, you do help those global dynamics. And the North Sea is a very good basin with a lot of oil and gas left and a very supportive and conducive policy framework to continue to invest in. And there are lots of opportunities that actually have near-term development potential. It's not as if, the next investment in the North Sea would take 10 years to start producing oil and gas. Many of the things that also Sinead referred to are relatively near-term developments. So in that sense, the UK absolutely and the North Sea has a role to play in the national energy security piece. But secondly, and that's not necessarily just energy security, you have to bear in mind that the UK, both for oil and gas, imports these products in order to balance the market. Now, you can ask yourself the question, are we better off importing oil and gas from other countries, or are we better off developing our own natural resources to supply our own market? Both from a balance of payment perspective, as well as from a climate change perspective, as well as from a security perspective, I would argue for the latter. So as long as you are importing products, you're better off producing them yourself. And in that sense, I think there is a case for continuing to invest in the natural resources of this country.
Yeah. Thank you, Ben. Tom, on your second question around windfall tax, I fully understand this is just a really difficult topic. It's a difficult time, particularly in the UK as well. What we've said specifically on windfall tax is that it is a matter for government. Taxes, full stop, are a matter for government and the policy around them. But we continue with the dialogue and we will continue to do so. Now, beyond that, of course, it's important to remember, as Ben has just simply said, this is a matter of global markets. It's the global element of it. So our role is to be very careful and supply the much needed security into the UK. And that's what we're trying to do. We've discussed bringing elements online, such as penguins, being able to go towards hopefully sanctioning jackdaw, making sure we operate truly well, and making sure we continue to invest in the energy transition, which is where we will move beyond this point as well. Now, let's be clear, that up to 25 billion of commitment that we have talked about previously today and in the past as well is something that we care about. That's our commitment in terms of where we want to be in the UK. And we will continue to develop that. So you'll see more of that over the decade. And that will have the biggest impact, I believe, over time. So with that, thank you for your questions and for joining the call today. I hope we covered it and gave you some insights into our Powering Progress strategy delivery and how we are striving to ensure the security of energy supply during one of the most challenging periods for the world. We also invite our shareholders to support the progress we've made in our energy transition over the past 12 months and to cast their votes at the annual general meeting on May 24th. I wish you a pleasant end of the week and I hope you and your families stay safe and well. Thank you.